It's time for your Low Country real estate market update. It's the Brian Beatty Real Estate Show. Brian is one of the top 1% real estate agents in Charleston. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-400-8009. Now, broadcasting from the WTMA studios, here's your host, Brian Beatty.
Good morning, Charleston, and welcome to another edition of the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA and WTMA.com. I'm your host, Brian Beatty, and man, I've got some headlines for you guys this week. This is going to be a bit of an interesting one. Here's this week's headline. Just let's kind of give you a little bit of a sneak peek about what you're about to get yourself into here over the next hour. If you have better than average credit, you're about to pay more for the same mortgage on the same house as someone with a lower credit score than you. Yes, our current administration continues its reign of terror on our economy, right? Surprise, surprise. So I'm going to get into this. I'm going to tell you guys what's going on. These are some changes that start on May 1st. They've not been well publicized, and probably for good reason, because it's going to cost people that are actually financially responsible more money to buy a house. So I'm going to break that down for you guys this morning. We're going to talk about a few different things today. We're going to talk about the state of the market as it relates to mortgages, right? Borrowing, that side of the equation. We're going to talk about what's happening here locally in our little corner of the world in Charleston, South Carolina. And then we're going to talk about the state of the market as it relates to real estate agents. You know, we don't, I certainly don't talk about it very much on this program because I like to rely on, you know, my experiences and what I go through as a top performing real estate agent. I've been in the top 1% of agents here since 2009. And so I just relay my experiences to you so that as you consider buying, selling, or investing in real estate, maybe you want to sell real estate yourself. You're an informed consumer. You've relied on this information from someone that's been doing this at a high level for a long time. You know the right questions to ask. You know what to expect before something happens. And you've learned how to align yourself with true professionals so that you save money in this process or make money, depending upon how you want to look at it. Now, just a few quick housekeeping items. If you want to reach out to me, if at any point in time you'd like to have a conversation with me privately off air about your interest in buying a home or selling a home, we've got a ton of great incentives that we've rolled out for folks with listing commissions as low as 2.4%. If you're buying a home and selling a home locally, we'll pay your moving expenses. We can help buy you out of a lease. I mean, there's a bunch of different things that we do. It just depends on your situation. So if you'd like to reach out to me and have a chat about the market or about your interest in buying, selling, or investing, my number is 843-800-0065, 843-800-0065. You can also go to our website, listingsincharleston.com. That's listingsincharleston.com. You can also email me if that's what you'd prefer to do. My email address is pretty simple. It's Brian, so that's Brian with an I, at brianbeattyteam.com. Brian at brianbeattyteam.com. Beatty spelled B-E-A-T-T-Y. So, all right, let's get back into this. So here's a little noticed kind of revamp of federal rules on mortgage fees that will offer discounted rates to people with lower credit scores and force higher credit score home buyers to foot the bill, basically. So this is kind of their most recent unprecedented move of stupidity, in my opinion, among our administration. But Fannie Mae and Freddie Mac will enact changes to fees, which are called loan level price adjustments, LLPAs. So on May 1st, this will affect mortgages originating from, you know, Wells Fargo to JP Mortgage Chase, everybody in between, effectively tweaking interest rates paid by the vast majority of home buyers. So let's break this down just a little bit. Fannie Mae and Freddie Mac, they're government-backed entities, right? They buy up loans from mortgage lenders and either hold them as assets or they resell them in the mortgage-backed securities market. You know, both have been in federal conservatorship since the housing market imploded, you know, during the Great Recession of 2008. Now, LLPAs, or loan level price adjustments, are upfront fees that are based on factors like your credit score and how much of a down payment you're going to put down when you buy a house. And the fees are typically converted into percentage points that alter the buyer's mortgage rate, or can be in the form of upfront fees. So under these new rules, and this is important to understand, although it's not rocket science, under these new rules, high credit buyers with scores ranging from 680 to above 780 will see a spike in their mortgage costs, with applicants who put down 15 to 20% as a down payment experiencing actually the biggest increase in fees. So under this revised LLPA kind of pricing structure, remember loan level price adjustments, let's say that you're a buyer with a 740 credit score and you're putting down 20% down as a down payment. You're about to face a surcharge of 1%. Now, it used to be 0.25%. Now so they're increasing it 0.75% to 1%. So when you kind of absorb that into the long-term mortgage rate, the increase is the equivalent of slightly less than 0.25% based on the mortgage rate. But if we kind of apply that to real numbers on a $400,000 loan with a 6% rate, that buyer would expect to pay about $40 extra per month. So you can either pay the $4,000 surcharge or you can roll it into your mortgage. Just remember that if you're paying $40 a month and you've got a 30-year fixed mortgage, that $40 a month over a 30-year period is, $14,400 in extra payments. And I didn't do the calculation on what that means in terms of the total amount that you would be paying over the life of the loan, but it's certainly going to be more than $14,400. Now, buyers below a 680 credit score are going to have their fees dropped. Not dropped, but slashed. So it's going to be more favorable for them. So as an example, if you've got a 620 credit score and you've got a down payment of 5%, instead of you getting charged a fee of 3.5%, you're now only going to get charged 1.75%. They cut it in half. So that's the equivalent of about a 0.5% of 1% or a 0.5% discount on the loan. So what's the result of all of this? Price your monthly mortgage payments for most buyers and a lot of really upset people, right? I mean, think about all the people that have worked incredibly hard, have made sacrifices to pay their payments on time, to ensure that when they need to borrow money, when they need to acquire debt, they have the ability to do so at attractive rates, right? We're about to basically take this concept that we've all been born and raised with, which is that the more you are responsible with the money that you borrow, the more of it you can borrow and the less expensive it is to borrow it. You act responsibly, you pay your bills, you prove that you are worthy of borrowing debt responsibly. You save money for a large down payment, and now you're being told that's a negative. That's a really tough pill to swallow. Now, the Federal Housing Finance Agency, FHFA, is saying that these changes will help maintain financial health at Fannie and Freddie, a key element of its responsibility as conservator. And Director Sandra Thompson said in a statement earlier that these changes to upfront fees will strengthen the safety and soundness of the enterprise by enhancing their ability to improve their capital position over time. Well, they know they won't be able to make up any ground by charging people with lower credit scores and lower down payments more, right? So they're spreading the love by asking financially responsible borrowers to basically pay for it, right? It's and here's what really rubs me the wrong way. It's coaching people that are already financially irresponsible by saying, it's okay, you don't have to worry too much about your credit score. So, you actually get a bonus now for putting less money down and having a slightly lower credit score. It's really troubling. And so I want to take a break. We're going to let that set in for just a minute. I'm going to hit you with a few more stats about kind of the financial thermostat of our country. I'm going to give you guys some really interesting statistics as it relates to like U.S. savings. And then how this is going to, in my opinion, impact the real estate market. So stick around. This is the Brian Beatty Real Estate Show right here on the Big Talker 1250 WTMA and WTMA.com. Remember, if you want to reach out to me, you've got questions about this, you're thinking about buying a home this summer, these are things you have to know. And by the way, I'm not done because we've also got to talk about jumbo loans. You know, things that are above, it's like $740-something thousand is the cutoff for conventional loan limits. That's about to get expensive too. So I want to talk about some of this stuff and how this is going to impact the real estate market, a market that, by the way, is already kind of sucking wind right now. You know, we're struggling. It's almost like people are poking and prodding the bear, waiting for it to wake up. You know, all these people are just kind of hoping that the market's going to crash to fulfill their, you know, self-fulfilled prophecy. It's really hard timing with this. And so stick around. We've got a lot more to talk about right here on the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA. And if you want to reach out to me, 843-800-0065. That's 843-800-0065. Or listingsincharleston.com is the website. Stick around. We'll be right back.
More stimulating talk on real estate matters with Brian Beatty next on 1250 WTMA.